Good morning, everybody. Welcome to the Flow Show. Middle of the week already, 16th of October. Morning, Kay. How are we doing?
Good morning, Ryan. Good morning, everybody. Yep, doing all right, mate. Thanks. Doing all right.
Good. Right, a few bits and bobs to get over, so we'll get stuck straight into it. China's Housing Ministry, Ministry of Finance, and the PBOC are to hold yet another briefing on Thursday morning their time. Likely a load of measures going to be enacted, possibly. We've heard that there may be some deposit rate cuts coming. Maybe there's some more mortgage help, who knows? But something else for the market to get excited about, although I didn't get that excited over the weekend stuff. If the price moves afterwards, to be told on another disappointment. But still, these headlines are going to keep dribbling out of China for a while longer. Over in Japan, one of the BOJ members, Adachi, started off with some comments that were pretty hawkish, and then they sort of slid down the scale the longer he spoke. The headlines that the Wires picked up was that he said conditions are already in place for the BOJ to start normalising monetary policy, which they are. He said in normalising monetary policy, the BOJ must take rate hikes in several stages. And then again, in normalising policy, the BOJ must avoid drastic policy changes that could stoke the fear of a return to deflation. The bank will raise rates at a very moderate pace, maintain a accommodative financial environment, and do that until the underlying inflation is stably and sustainably at 2%. So, yeah, they're ready to hike. They are hiking. They're ready to tighten, but it's going to be slow and steady. Not a huge amount for markets to get into that one or take from that one. Another headline, though, according to NHK, one of the big industry union things, can't remember what they're called, Rengo, can't remember their exact description, says it's looking at least a 5% wage hike for next year. So some early numbers popping out from that. That would be quite a solid another hike in wages next year, and that will get the full support of the government and the Bank of Japan. Anything to take from that BOJ comment, Kay, particularly as we're, circling around what's going to happen at the next meeting?
Yeah, well, keeping your weight as line probably. Not really giving anything new, but keeping the potential for more hikes open. I was looking at the JGB yields after those comments. They haven't moved at all. I mean, they're actually a BP or two lower this morning. We do have the CPI coming up on Friday, Japanese CPI on Friday, which will be a mover once more. But it's clear that it's of course again translations, but they will need CPI to continue to print 2% or over. They are expected. The national core CPI is expected above 2%, around 2.3. The national one was the headline one was 3% last time, so comfortably above their hiking potential levels. But again, I mean, we are having what was it? When is it? In 11 days, 2 weeks, we are having those elections in Japan. Will they hike straight away after the elections? That's going to be the big question. And we know that as long as they don't hike, yields will still remain low versus the rest of the majors. So yeah, I mean, does it change a lot? Not for me right here and now.
Yeah, thanks, mate. Over in New Zealand, we got some CPI data out. Let's get that up on the screen. This is quarterly CPI. So year on year came in as expected 2.2%. Quarter on quarter came in a touch softer than expected 0.6%, but it still was a rise over last month. One of the RBNZ's magic inflation models, the sectorial factor inflation model, showed a print of 3.4% year on year for Q3. That's down from 3.6% previously. RBN Silk popped up to say they have a lot of info to digest before November the 27th. They will look closely at the core and non-tradable data. So yeah, not much given away there. RBA Assistant Governor Hunter said inflation expectations have not become de-anchored. They're not currently concerned that expectations could become de-anchored in the near term. The board is constantly alert for signs that this risk might emerge in Australia. So once again, the central bank giving the importance of inflation expectations as much as what inflation does itself. Speaking of inflation and what it's done, UK inflation came in pretty soggy. Surprise to the downside. Headline CPI coming in at 1.7%, 2 pips lower than expected, 5 lower than previous. The core also coming in lower than expected, 2 points, 3.2 versus 3.4 and 3.6% prior. A lot of red, as you can see, coming in the PPI numbers as well. So looks like Bailey did indeed give us a bit of a heads up last week with his comments that the BOE could become more aggressive and activist in terms of rate cuts. Did he see the numbers? Did he not? Who will know? Anyway, we've had a bigger move in the pound than what the rate expectation changes have been. We were pricing around a cut by November, 25 pips. That's now around 30 pips for December, i.e. how far the rates will go for December. We're pricing around 44 basis points, 44 pips of total cuts by December, which is less than 2 cuts because the 44 pips is rates from here to December, not between November and December. So not quite pricing 2 cuts for the rest of the year, which is a little bit maybe underpriced, but I'm surprised that we didn't get a more dovish repricing and doing something stupid like pricing a 50 pip cut for November like we've seen elsewhere. Kay, what was your reaction to the CPI data? The pound's gone more than the rate change suggests.
Yeah, that's one of those things where pound is swinging relatively swiftly. We know that this market, the market was buying pounds yesterday, right? And because we saw the euro sterling gradually coming down and cable trying to get back above that 131, which failed then because of the dollar coming back a little. But yeah, I think it shows us that all is important now for the sterling, not only jobs compared to the US, for instance, but also inflation, very important in sterling in the UK again. And is this kicking off the pre-budget market in sterling? It is very possible, in my opinion, Ryan. And perhaps this is now confirming that the sterling market should be on its toes, including for the Bank of England to come, right?
Yeah, exactly that.
So in that,
as we've been saying, as I've been saying,
in that respect, it's probably not overdone this move, but we will just see if it lasts, because this market has a tendency of putting in a pretty solid move and then retracing most of it. So and we are like busy doing it right now. So yeah, but I think it's going to keep the sterling market on its toes.
Yeah, exactly. As I've been saying for the last couple of weeks now, I wouldn't necessarily jump into shorting the pound, but I won't be a buyer of the pound going into this budget stuff because I feel that it could be more negative than positive. Time will tell, of course, but yeah. So the path of least resistance at the moment still looks down for the quid. And I was 130 was a level I've been speaking about, looking to potentially trade, not trading it into that data when I'm just waking up in my bed. So I left that alone. But just for now, cable, we're mooching around this 130 level. Keep an eye on this now. If we manage to hold it from here, then we've got a good chance of eating back some of this loss here. But there's a few little bits and pieces, levels here, 2030s, that we need to get back above. And in the meantime, we're still in this downtrend move. So just keep an eye on that. I wouldn't be in a rush to be buying the quid down here. But if 130 holds on another test, then you feel like a bit of scalping, that's your level to do so. You know where your pain is if you're wrong. Right, moving on from that, but staying in the UK, apparently the old 22 billion black hole that's the biggest black hole in the universe might get even bigger. Stories saying that it could be up to a 40 billion black hole. Now, just without going into great detail, just to give you a heads up, this black hole, it's not actually missing money. It's just basically where governments forecast a budget and then the amount they have to actually spend versus what they actually budgeted for creates the black hole. So in this case, they're looking like to fulfill prior commitments, they would have to spend £22 million more than they budgeted. That's how the black hole is created. Okay, so it's not money that they have to, money that's been spent. It's money that they will have to spend. That's why I call it a black hole. And there's still question marks over whether that black hole is reality or not. But I digress. It now might be 40 billion black hole that they need a big shovel to fill in. Anyway, Germany, trouble brewing again in auto industry, manufacturing side of things. Employers in various sectors have proposed a 3.6% wage rise over the next 27 months. So a price rise of 1.7 and another one of 1.9%. This is while unions over there are demanding wage hikes of 7%. So quite a big gap between what's being offered and what's being wanted. IG Metall is one of the biggest unions over there, and they always go through wage negotiations. They said they will, at the outset, they said it's not a good offer, but they will evaluate it further. It could lead to possible strikes at the end of October from the 29th if they decide to go down that route. But otherwise, we're still in the negotiation phase. So it's not looking good for Germany. There's no way they can... a lot of firms can offer big wage hikes given how business is slumping over there. So expect that bum fight to continue for a bit longer and pile the pressure on the German government. Coming over to the US and a bit of data yesterday. First, we got the Empire State Manufacturing, which came in at a bit of a shocking minus 11.9, was expected to come down from the prior month, but stayed positive. It went negative again. This one has been a bit all over the shop over the last year or so. However, just looking at the details, employment went into positive at 4.1 versus minus 5.7 previously, so a pick up in employment there, which has been pretty soft. Prices paid also rose, 29 versus 23.2. New orders did most of the damage here, falling. The index fell to minus 10.2 from plus 9.4 previously. Expectations, though, are looking a bit brighter. 6-month expectations rose to 38.7 versus 30.6. So some optimism moving forward. And optimism is always a good thing to have because it can manifest itself into actual activity, but we shall see. We do get the Philly Fed. It's either today or tomorrow. Just having a look. Let me check. I think it's tomorrow.
In fact, tomorrow I don't see anything.
Yeah, tomorrow. So there'll be another look into the manufacturing sector in the new month. These are the first numbers we get from the US. Over in Canada, more disinflationary pressure going on over there. Another downside miss on CPI, falling to 1.6 from 1.8 expected. Although it was a bit stickier on all these 30 million other measures that they pull out, coming in largely as expected, unchanged, even one going up. The Bank of Canada core number also went up a bit to 1.6%. I was a bit surprised by this 1K. yes, the headline number went down, but those core measures still looking sticky. I was surprised the loonie did what it did.
Yeah, I guess that's what did it for the CAD. It initially jumped and then it came all the way back down. I was musing about it this morning. It was quite funny because Canadian dollar weakened on a pretty strong jobs report, but then yesterday on a weaker headline CPI, it recovered and more than where we started from. Yeah, I think those trimmed and median measures are the ones. Aren't those the ones that Bank of Canada is really looking at? I don't have too much of an opinion about it. Yeah, the core measures a bit stickier, and that's really it. It does seem that $CAD is finding resistance there, right? In the low to mid 138s. I think you highlighted that level as well already, but a little over 138.5. But yeah, it is. Although the market is like in the mood or thinking that $CAD is going to hit 140 at one stage. The market is just telling us not so fast and perhaps too many longs too high too late. And it's a bit what we are seeing in cable today. Happened in the $CAD yesterday.
Yeah.
I don't have too much of a view on the CAD right here and now, to be honest.
No, it's the fact we're back below this 138 could be significant. So I'll be watching to see how any retest of this level holds up. If we go back above that fairly easily, fine. It's just a bit of a wishy-washy level. How we get on at this high will be potentially important. If we get up and pull up short, 25s, 20s, 25s, can't quite hit that level, that would start to indicate maybe a bit of exhaustion. Doesn't mean we're going to go all the way back down again. It just means it's becoming a bit tougher to go up. And so if you're looking to fight a strong trend like this, wait for the evidence to show you that we may be stopping going up. And then, yeah, Gavin, I think you're right on that. Too many people getting excited. Yeah, so just keep an eye on this one. If you're trading this one, some of you might have been tempted to keep hitting the rally as it was going up and up and up and up and up and up. There was no cause to start hitting that until you get, as I say, evidence that we are potentially not going any higher for an extended period. The swaps market in Canada have obviously been swinging the old pendulum. We're now pricing 75-80% chance, I think, the last count of a 50 pip cut at the BOC. That's up from 50% before the data. So the market is leaning very dovish going into this one. I'm still on the side of conventional wisdom that says I don't see why they should go at 50, but we're in that world now where 50s are the new norm, it seems. No one blinks an eye if you do one. So I don't think they should, but whether they do or not is another question, just like the RBNZ. Right, moving on to the Fed heads. Daily risks to inflation and employment are now in balance. The Fed funds rate is a long way from where it's likely to settle. The likely neutral rate is higher than it once was. It says 3% may be around neutral. It's important to keep these neutral level comments in the back of your mind, because it just forms a basis of where the Fed will potentially cut to before stopping. We need to see if that shifts and whether the data is going to say, yeah, that's okay to stop at 3%, or maybe you need to do more. She sees 1 or 2 more rate cuts this year if the forecast is met. Fed's Bostic says the economy is performing quite well. Also repeated that 1 cut is maybe likely. 1 more cut may be likely. If you haven't seen it, it might be worth it having a look. Our mate Donald Trump, fresh from his dancing appearance the other day, was in a Bloomberg interview, sit-down interview yesterday. And he was giving some quite strong comments, one of them being on the Fed and Powell. The interview was trying to push him in as to whether he would get rid of Powell and would he try and influence interest rates. he kicked off by saying that Powell dropped rates too much, talking about going back, not this 50 pip cut. And on the subject of, let's call it presidential interference, he said that presidents should be able to talk to Fed chairs and that they have a right to tell the Fed what to do on interest rates. But he, in the same sentence, he said, tell them what to do on interest rates, but not order it. And that's probably the key comment to take from that, that he doesn't believe he should tell Fed heads what to do or order them to move rates. Now, of course, he could get rid of Powell and put someone in who's more in his line of thinking and perhaps he has more influence over. That's still something that's going to raise its head as we go through this election, particularly, I would say more so if he ends up winning. Those questions will start to get asked. But yeah, at the moment, he doesn't seem like he wants to actually order any interest rate moves, which will please the market somewhat, because I don't need that sort of interference. We've still got this Israel stuff to contend with, and what they're going to do, when they're going to do it, how they're going to do it. Israel's Defense Minister Gallant came out with a comment saying an Iran attack response will be precise, painful, and a surprise. Sounds like what I get if I fail to notice my wife's had her hair done. But anyway, moving on from that. Okay, any other news you want to bring us?
No, I think we covered everything. As you said on Trump, it does see. He already told us last time, right? At the end of his tenure, when he was there the last time, and when all those shenanigans went on, that one of his first jobs was to get rid of Powell if he comes back in. So I guess that we're in for fun and games if Trump gets it. I don't even know what I all of a sudden don't even know what to do anymore if he gets elected. But yeah, for sure it's going to be a real show if he gets back in. Yeah, that's all I want to say about it.
Yeah. Thanks, mate. And you're right, Angela. It does serve me right. Serves me right often, believe me. Right, let's have a look at what's going on hither and thither. We've got a few breaks on the cards. Euro dollar had its little breakette, another one yesterday through 110, 109s. It's failing to get back above there. We're running into trouble just ahead of this 61.8 fib here, and the top of my old zone from 108.70 down to 108.30. Always sees a lot of traffic when we're here. So holding it for now. Is it level to buy off and see it screaming higher? I don't know. It's the price action is very telling at the moment, and OK's got some thoughts of that, and as was raised by our mate DKT in the chat room as well. This pricing is grinding, so it suggests that there's some flows behind it. Kay, what's your thoughts on this one?
What I do note for the short term, for the short term, what I do note, and Jacob just mentioned it as well. 108.75 is a bit of a support there, and it's also the 200 DMA, and we are ahead of the ECB. And surprisingly, surprisingly, yes and no. I think the ECB must be in Slovenia this time because sometimes the ECB member central banks host the 2 days meeting in different locations. They're not always held in Frankfurt. So, but she is talking tonight at 22:08 apparently UK time, 22:09 CET, and there, if I saw it correctly, there will be a text. Yeah, the text will be made available. We shouldn't hear anything. But the slightest hint that she may give at a smaller or bigger cut may actually move the euro dollar more than during the meeting tomorrow. I find it relatively heavy still, but we do come into an interesting zone there. So that's why I've been running short, but I'm much smaller right now. I'm also a little disappointed I wasn't in front of the screen when it hit 108.75 to buy some more back. But yeah, as we said yesterday, the risk tomorrow will be, there will still be a risk for 50 unless she kills it tonight. But yeah, the surprise move would be perhaps today a bit of a less dovish stance than what we may expect on those continuously German numbers, French data that are starting to come off now as well. So the two major countries, let's say, of the Eurozone are in trouble, I'd say, and so there's no real reason for them to be hawkish, I think. But yeah, just coming back on actually what happens in the rates, I think 109.25, 109.40 now. If tomorrow we start to get back above 109.40, then that may mean that this move has run its course, perhaps. I also would think that ahead of the ECB, late shorts, weaker shorts may be tempted to buy a few back, and I've got the impression we're going to run into the ECB tomorrow at 109 the figure, unless Lagarde says anything tonight.
Yeah, maybe we just are seeing a little bit of some 50 BP expectation trading going on, hence why it's just remained heavy. But yeah, it's just on the grind, and usually when you get something on the grind, it means someone's got a bit to do, but they're not in a big rush to do it. As far as Lagarde goes, I'll be shocked if she does say something on monetary policy.
She should not.
No, because we're in the blackout period, and if she does, then she can have absolutely no further complaints about ECB leakers and the sources stuff we usually get after an ECB meeting. So yeah, she's speaking. There is a tiny risk that she says something on monetary policy or that influences what's happening tomorrow. But apart from that, yeah, go on.
Yeah, I think it all goes as expected. Let's say a relatively dovish 25 BP cut because of growth worries in the Eurozone. I think then we may see those model funds, CTAs, continue to weigh on the euro dollar for a while. I wouldn't think it's going to be a complete washout, but just continue to weigh on it, and then yeah, this 109, 108.75 all the way down to 108.35-ish to me is a relatively important zone. If we start to break below, hold below that daily moving average 108.75, then it's probably going to remain heavy. I think I got the impression if we get what we want, that we are going to trade 107 soon, but is the dollar strong enough to drive it through? That is my other question, because obviously we do have still big data to come before those US elections, but I think the closer we get to the US elections, the more how shall I say, on our toes we should be in regards to the dollar, because without wanting to front run too much on things like the US elections, I have a feeling that neither of them are going to be good for the dollar. So
yeah. Thanks, mate. Euro sterling might as well cross the two between cable and the euro. It was looking like we might have been heading back towards these lows earlier this week and yesterday. That's all been flipped around, obviously, after the CPI data from the UK today. Fundamentally, I don't think anything's really changed. What's likely to move this, as I said, is potentially the UK budget now. Less the ECB do signal that 50s are really active on the table, or that rate cuts might come faster. That might send us back down to these lows, maybe even break them. We shall see. But if not, I think we're going to be mooching between these lows and this zone up here. So I got triggered out my longs from down here previously on Monday, 83.50. So I'm flat on this one. I may look to play the range again, just see what happens. But otherwise, yeah, I'm not seeing this one going anywhere anytime soon. But so that budget stuff might come into play as well. Aussie dollar, that was playing really nicely at this support level. Then we got the break. not sure why this one went. It seemed to go around the same time that Aussie that Kiwi CPI came out. I don't know if you saw any reason why it broke. Maybe just following suit and the weight of numbers, Kay.
Yeah, I saw some comments, but they are opinions. They are not real data on the Aussie. Yeah, it does look like 67 gave way around the same time. I also think that has perhaps a bit to do with China still, also the reluctance to be in China. But yeah, I have not really seen anything shocking.
Yeah. So anyway, it broke, and as often happens when you get a big support point, when it breaks, it goes a bit. It managed to get into yet another zone that I've got. Do love a zone. Didn't quite get down to the bottom, but close enough. And thus far, it's bounced back above, and it's starting to hold the top of it for now. But what's interesting here is how we're now respecting the break point at 67, and we can't get above it. So that's important. That's showing that this break is potentially a strong one, and that we may be heading lower. So a bit like cable at the 130, this is your pivot line now. If we get back above and start holding it, then maybe we're going to start to put a dent in some of these losses. But the price action here, where the bounces off this area have been very, very weak, suggests that on balance we probably will be heading lower, but price will do what the price will do, and we can only look at what the clues give us. So if we're back above 67 and holding it, then maybe we're going to have a push back higher, but it will need to clear out some of these levels, 40, 50, 60 area. On the downside, if we're getting below this zone and holding below this zone, then we're going to look for maybe a bigger move, low 66s, maybe even down towards the 61.8 fib and around 65, 60 area, which is a bit of a level going back into July and August. So breaks happened. Now you get to see what happens when you get a solid support that breaks. You get a bit of follow through. Quickly, I'll have a mooch at gold, then I'll pass it over to the K-Man. We've had this break above 26.70. Now it needs to take out this high, 85s. If it can't do that, then we might have a similar situation here where we broke the support, ran into trouble a bit further down before bouncing back up. Same situation here. We might run into trouble here. If that happens, then we might come back into the box. All that means is that we might just extend the range between those two levels rather than this inter-range. But we'll have to see what the evidence says. If we back down below here and it starts resisting again, then you can rely on that as a potential trading level. I've obviously chipped off a bit more of my gold long on this move, but I want to see it above 26.85 and holding above there as well. Get that confirmation, then we're off to the races, probably 2700 not long after. Right, Kate, going to ping it over to you, mate.
Yep. Well, actually, today I don't have that much to show.
No, want me to keep it and just swing around?
Sorry?
Do you want me to keep it and you pick them, or?
No, I'll go quickly over, unless some of our viewers have like one specific pair or so that they want to watch. I don't have much to really show. The only thing is that there's one thing I'm looking at here in the dollar yen, and there's this one where there is this kind of we have those comments from the Japanese officials. We have Adachi overnight, and still dollar yen is kind of stubbornly trading above 149, right? I still have the impression that we are going to have a look at a move over 150 at some stage before we turn around. We don't have too much big US data coming up. Yeah, we got the continuing claims tomorrow, but today it's really quiet. Philly Fed tomorrow, of course, can move things around. But assuming they are not dramatic, I think there may be a chance that at some stage we are going to have a bit of a look here at just the halfway of what we did from coming down from 162 to 140, and that comes in at around 150.80, and then just above here we have our peak 152 again. It doesn't feel like we have the power to get there. But we must say that from those highs close to 150, we did a big figure on the downside, and now we are like gradually stabilizing, but above 149. We're not stabilizing in 148, closer to 147 even, where we've had the bounce from. And in the real short term, we broke a bit below this wedge, but it's so short term that I don't like to look at those things. But it could be that we just run along slowly along this line to go up and test those higher levels. That is sort of what I think about the yen right now. That until we know about the elections. As I said, I mean, Bank of Japan can say things. Of course, we have the Japanese CPI coming out on Friday, which is going to move things around. By Friday, this could be completely obsolete, and we're trading down in the 147s again or so. But if you only look at events or so, I don't see too many events before those elections that are going to stand in the way of a gradual move higher. Hi, Jacob. Yeah, I think Ryan already covered the euro dollar. So that about what I think about the yen right now, just because of the price action is telling me that each time we drop under 149, we seem to find buyers. Okay, that is just like the kind of feeling that I have for this yen right now. Yeah, well, you were telling us and showing us this 200 DMA on the euro dollar. It is right here around 108 3/4, right? But I do have a bit of interest around this 108.35 as well, which is the 61.8 of the latest rally. You know, after we had the end of 2023 rally came all the way back down, and then this year's April into September rally, the 61.8 comes in around 108.35. I think that for the ECB is going to be a key level tomorrow, 108.35. Keep that in mind. This is really going to be important in my opinion. All right, and then on the other side, Ryan already had it too. I think it's around 109.40, and I have it also on the shorter time frame.
Just before you flick off on that,
Yeah.
I just want to ask Jacob, if you had, because you're talking about going long 108.75, if you had it as a level already, or if you're watching that moving average, if you haven't traded it now, then be a bit more cautious if you're going to trade it again. We've obviously had a first move, it's touched, it's bounced. Ideally, that's the one you always want to get on the first one. But if we only bounce to, you know, where we are now, can't get through 109 and then come back down, then you've got to be a little bit more cautious while we're coming back to that level. Doesn't mean it's not going to hold, but you've already had one bounce and we're back at it. So just be a little bit cautious and plan your trade accordingly. It's not right just to have a level and say, I'm going to trade it whatever, no matter how many times it touches. You always got to plan that in. So yeah, just manage your trade based on what the price action is doing.
Okay, and then here, this one, I'm just showing the same one. We're still trying to figure out whether we're going to hold 86 figure 10 on this dollar Swiss. Nothing going on on the dollar data side today, but the decider here will likely be the ECB. If the ECB is more dovish than expected, of course, euro dollar will go down, which is as such supportive for dollar Swiss, but euro Swiss will be the mover. Okay, so if euro Swiss drops faster than the euro dollar drops, be careful here and for tomorrow. In the meantime, We're still trying to work on it. And for as long as we're working on it and holding it, I view it personally as short-term relatively positive for a gradual move higher. I'm not looking for huge moves, but I do think that we may have a chance if we hold this 86 figure 10 or max 85, 80 now to move higher. Okay, for those reasons. And really for today, Ryan already showed the gold. I think you showed the gold with the nice shorter term levels. And if you look at the longer term, I mean, this is monster bid, and this is a weekly. I've got the impression that this market is not going to rest before we print close to 28. Some big fat targets up there. 28, 28, 20. Okay, there are some really big targets up there, and contrary to what we may have expected, as we were talking yesterday, on slightly more. We can't say that things are over in the Middle East, but maybe not going to the worst of the worst. We may have expected it to correct a bit further. It did not, and we are trading at the latest highs again in gold. So watch if we get through that. What is it? 26.85 prior high. Yeah, 85. I think then we are going to be relatively quickly in the 27s, 27.07, 27.35 are levels that I have in between. And with that, Ryan, back over to you, mate.
Yeah, thank you very much, mate. We shall call that a day for today. Yeah, what have we got coming up later on? Not a lot. Import, export prices, NBA, and that's it. So fairly quiet rest of the day today. So take care, trade your levels, watch what you're doing, be safe, and we'll see you all tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.